joining us on the show right now. Hi, very good morning and thank you so much
Good
for
morning.
your time. So first of all, let's start with the once again rise in the geopolitical tensions, because of late the world was just dealing with the uncertainty around the US tariff and the implications on economies and businesses. But with the rise of new geopolitical tensions, especially what's really been happening in the Middle East, give us some sense, how do you see the situation escalating and what implications can it have on the world economy and especially the crude oil prices?
I think with respect to crude oil prices, there is substantial shock absorption capacity in the world. There is ample supply in the area outside of the one that are under the gun right now, which is the countries in the Straits of Hormuz. Vulnerabilities are substantial. A lot of oil and gas from that region flow into Asia. Asia's dependence on that part is substantial. But if you think about Europe or the US, there is plenty other sources of supply, and which is why I think a lot of the Western oil market futures and spot trading action has been fairly muted so far. The kind of rally that we've seen in oil since Israel started attacking Iran are, nothing compared to historically, sharp reactions that the market has had in the past. And there are two major reasons for that. One, ample supply, even beyond the area in the Middle East. And secondly, very muted demand. We haven't seen major spike in demand for gas or oil out of the US, Europe, or China, three big sources of demand in the world. And as a result, even if supply were to be somewhat questionable in the near term around some escalation around Straits of Hormuz, that would not cause a major spike in oil. And the final point on oil is that at $75, oil is basically 50% below all-time highs in nominal terms. In real terms, it's like 60% below all-time highs. So even if oil were to go to 100, 125, we have been there, seen that many, many times in the past. And that's my key point on the Middle East developments and its implication on oil. The shock absorption capacity of the world with respect to somewhat higher oil price is substantial.
Right, Taimur. Hi, morning. So while it all sounds reassuring, at least on the oil front, given that we're adequately supplied, what are you making of Trump's fresh comments coming in overnight where he's saying that Iran will still not be allowed a nuclear weapon? They should have taken that deal. And he's also called for an immediate evacuation of everybody in Tehran, not only US citizens. He's called for everybody to evacuate Tehran. Do you think this is another major escalation in the making? Are these signs hinting towards that?
I think there's a lot of things in the fog of war where signals can be misconstrued and lead to disproportionate response from either side. In this particular case, let's hope that that was somewhat of an exaggeration. We're talking about a city of, I think, 15 million people. It's just simply not possible to evacuate a city of that size. More importantly, I think that if the Iranian regime feels existential threat, I think the set of reaction function that they would entertain would be fundamentally far more adverse for global markets and economies than a tit-for-tat situation, which is grave, but nonetheless, it is not existential. It will sort of honor the status quo as far as who rules Iran. If we go past that scenario and head into a far more adverse scenario about the Iranian regime's outright existence, of course, far worse eventualities would have to be entertained. Now, in the context of far worse eventualities, Iraq-Iran fought against each other for 8 years in the 1980s. Iraq, when it was withdrawing from Kuwait, set oil field after oil field on fire in the early 1990s and after Operation Desert Storm. Neither cases led to a major oil shock akin to the kinds of shocks we saw in the 1970s. And I think this is a critical thing to understand, that a single node of supply-related disruption cannot cause sustainable pressure on global commodities. It can cause spikes. It can be terrible for sentiments, but overall, the world can handle it. But in the short run, there could be major spikes and uncertainty, no question about that.
Taimur, I'm wondering what the central bank stance is going to be, and especially you've got Fed meeting later, you've got BOJ decision which should be coming just about any time now, and it's only these two central banks out of pretty much every in the world that have been actually holding fire and haven't moved on rates. With so much turmoil in the world, I'm just wondering whether there will be a change of stance anytime soon.
I think for the Fed to turn very hawkish at a time like this is unlikely. But at the same time, I don't think today's meeting would lead to some sort of a clear forward guidance about when rate cuts are coming either. The Fed has many uncertainties. What would be the duration of some of these tariffs? Nobody knows. And if you don't know, how do you model the direction of goods prices going forward? Expectations. We've seen expectations worsen substantially, meaning consumers are expecting prices to go higher, but we haven't seen that materialize in wage bargaining, in wage demands, or for that matter, on companies deciding to pass on substantial prices because people expect high prices anyway. None of those things have happened, and we have some data for May, and of course, the full set of data for April already to get a sense of the early impact on tariff, pretty muted. But at the same time, the Fed has to be forward looking. Just because we haven't seen a manifestation of higher prices doesn't mean we won't. And if indeed on the margin oil goes up as opposed to down, that adds to Fed's concern about price stability. So I think the Fed is in a very tricky position. It would have to be very clear to the market that the uncertainties around right now make it stay on that wait and see mode. If in the next couple of months the economy shows some additional signs of weakness, prices don't jump the way we had feared a few months ago, trade-related deals or postponements happen, then I think the Fed can start getting in the business of cutting rates at least twice this year. That's our forecast. I think the market, having been very, very dovish, has more or less coalesced around that forecast as well. Let's see. I'm still holding on to that forecast.
All right, but Taimur, what's your view on India's macro positioning versus the other emerging markets? Because for India, we are in the rate cut cycle, the inflation seems to be cooling off, and the other lead indicators are holding up well as well. Does it still hold the long India narrative globally?
It seems very clear that the long India narrative is there. I think there's some degree of impatience from global investors. They probably want even stronger growth-related outturns in India. Financial markets have been, very, very rewarding nonetheless. But at some point, you want that 7-8 growth trajectory to materialize, not the sixes. And at the same time, even beyond the top line growth numbers, company related earnings, company margins, overall data on sales, all those things. I think the expectation is would accelerate going forward, especially if the rate cuts that everybody's expecting materialize and the RBI, in addition to cutting rates, adds lots of liquidity to the system, creates a loan cycle, and around that we can see a sort of a virtuous set of loan demand, consumption, sales, farm level profitability, and all of that together lift growth past the 6% range. India remains very much favorably seen by global investors, no question about it. Asset allocators look at India before just about anything else when they think of Asia. But valuation-wise, there are, of course, question marks. It is a very frothy market. If you look at valuations elsewhere in Asia, and particularly in China, there are, of course, just from a valuation perspective, better buys to be had.
Okay, and Taimur, what are you making of the trade deals that we're hearing getting signed at the G7? We understand that the US and UK have signed a trade deal, although we don't know the details of that. US also seems to have, they claim that they have reached a truce with China as well. What are you making of these trade deals? How is it going to impact global trade volumes, and where does India stand amid all of this?
I will parse semantics a bit, which is deal versus an agreement. When we talk about, again, free trade agreement between, say, India and the UK, or the things that my country, Singapore, has signed with many countries in the world over the years, we're talking about hundreds of pages worth of a technical document, product by product discussion, very detailed Commerce Department official versus Commerce Department official sort of agreement. We are not talking about any of that stuff when we talk about trade deals between the US and UK or whatever is happening between the US and Japan. These are very, very high level discussions. Many details will remain unworked, even if these deals are announced. And so my view is that beyond high-level discussions on I will promise to buy so much from you, I will promise to buy or invest so much in you, we won't really see too much teeth in that. The US simply doesn't have the bandwidth to go ahead and start signing detailed trade agreements with country after country in the world. If you look at the history of trade agreement, those things take years. Even the implementation take multiple years. Donald Trump doesn't have the time or bandwidth for any of that. He wants some headline-pleasing developments where it shows that the U.S. is forcing countries to buy more from the U.S. and perhaps sell less to the U.S. and invest more in the U.S., he'll get some of those things. But I don't think that will fundamentally change the U.S.'s issue, which is it runs a very large saving investment imbalance. And for that, it needs to import a lot of stuff. It needs the rest of the world's financing. That is not changing.
Not anytime soon for sure. But Taimur, so good having you on the show today with your thoughts.
Thank you.
Thanks. Okay, well, here's the deal. And Donald Trump and the UK Prime Minister, Keir Starmer, say that the long-awaited US-UK trade